How do cross-border payroll errors get corrected? Where cross-border payroll errors come from. Most cross-border payroll errors in Canada are born from good intentions and bad assumptions. US finance teams try to graft Canadian rules onto US systems, rely on guesswork about tax tables, or assume that one or two remote employees do not justify a proper setup. Over time, those small shortcuts turn into real problems: wrong withholding, missed remittances, misclassified workers, or year-end slips that do not match the amounts actually paid. Spotting that something has gone wrong. The correction process starts when someone notices the issue. That might be an employee who cannot reconcile their pay stub to their tax return, a bookkeeper who sees that remittances do not match payroll reports, or a notice from the tax authority pointing out a mismatch. For cross-border employers, these signals often arrive later than they should because Canadian payroll is treated as a side project rather than something with regular internal reviews. Separating root causes from symptoms. Once you know there is an error, the first step is to figure out what caused it. Was the problem a one-time typo, a misunderstanding of a rule, or a structural mistake baked into the way payroll is configured? If the error is systemic, correcting it for one pay period is not enough. You have to fix the underlying setup, whether that means changing tax codes, recalibrating overtime rules, or reclassifying workers. Correcting under-withholding and short remittances. When you have under-withheld tax, pension, or employment insurance, the employer generally has to make up the difference. In some cases, you can recover part of that amount from future paychecks, but there are practical limits to how much you can claw back without creating hardship or damaging trust. For foreign employers, it is usually better to treat past under-withholding as a cost of getting the rules wrong and focus on getting future calculations right. Dealing with over-withholding and refunds. Over-withholding is the mirror image. Employees may be entitled to refunds when too much was deducted. Sometimes they can recover the excess through their personal tax returns. In other cases, especially with social contributions, you may need to file adjustments or amended reports so that contributions and reported income match reality. Communicating clearly with employees matters here. When people see corrections being made transparently, they are more likely to stay patient during the cleanup. Amending slips and year-end reporting. If errors span multiple pay periods, they will show up in year-end totals. That means you may need to amend information slips. Correcting slips is more than just reissuing forms. You also need to file updated information with the authorities so that their records match what employees are using to file their returns. For cross-border employers, this step is a reminder that payroll is not just internal bookkeeping. It is part of a wider reporting network that has to stay aligned. Communicating with the tax authority. When errors are significant or when notices have already been issued, it is usually better to be proactive with the tax authority. That may mean sending an explanation through the online portal, responding quickly to letters, or having your Canadian advisor speak directly to the file. The goal is to show that you have understood the problem, fixed the cause, and are willing to correct amounts owing. Silence or vague responses tend to push authorities toward more aggressive action. Using adjustments instead of quiet fixes. Quietly changing future payroll calculations without addressing the past rarely solves the whole problem. If there are underpayments or overpayments in earlier periods, the system may already have those discrepancies flagged. Adjustments and amended filings bring past periods back into line. Without them, you can end up with a permanent gap between what your records show and what the government believes you owe. Role of local advisors in cleanup. Because Canadian rules differ from US ones in subtle ways, local advisors are often essential when fixing cross-border payroll mistakes. They know how specific agencies prefer to receive corrections, which forms support adjustments, and how far back you realistically need to go. Bringing them in early reduces the risk that you will make a second mistake while trying to fix the first. It also signals to the authorities that you take the issue seriously enough to seek expert help. Currency systems and cross-border noise. Cross-border setups often mix currencies, time zones, and disconnected systems. A US HR platform may feed data into a Canadian payroll tool, while payments move through banks in yet another jurisdiction. That complexity can create noise in your records. Part of error correction is separating true compliance problems from harmless timing or currency differences. Clear documentation of how data flows among systems makes it much easier to show auditors what really happened when numbers do not match at first glance. Strengthening controls after a mistake. Every cross-border payroll mistake is also an opportunity to improve your controls. Once the immediate fire is out, you ask what allowed the problem to persist. Did you rely on a single person with no backup? Were you trying to run Canadian payroll through a tool that does not really support it? Did you skip periodic reconciliations between remittances, payroll reports, and tax account balances? Tightening those weak points is what prevents the same error from resurfacing in a different guise later. Final thoughts. Cross-border payroll errors in Canada feel intimidating, but the correction path is straightforward. You identify the issue, fix the underlying cause, calculate the true amounts that should have been remitted or withheld, make adjustments or amended filings, and communicate clearly with both employees and the authorities. For foreign employers, the real win is not just cleaning up a particular error, but building a process that makes future mistakes less likely and easier to spot early. If you require assistance with Canadian tax matters, our team is ready to provide reliable professional support. Please contact us at 416-283-8774 or visit theaccountingandtax.com for more information. And if you found this video helpful, don't forget to like, subscribe, and share.